now move our focus to the latest financial news driving the Nigerian fixed income market. For that, we are joined by Bankole Odusanya, fixed income trader at UBA. Bankole, it's always good to have you on the show. Let's get straight into it now. Yields at current levels are trading higher than levels recorded at the January MPC meeting. Would you say that the market has already priced in the MPC decision?
Yeah, thank you. To a large extent, market had priced in that CRR on private sector funds will be increased. There was anticipation that public sector CRR would also be tightened because there was serious concerns about the value of the naira and the pressure on the naira. So there was also word and feelings that they would possibly devalue. In fact, certain positions were taken against devaluation. But what we saw was just adjustment of the CRR on private sector funds. And I wouldn't lie to you, what happened was that the reaction was as if it wasn't as tight as we expected. People had sold down their positions. Maturing securities and funds were not reinvested into long-term securities. People placed on overnight. And what has happened since the 17th of this month, 17, 18, is that most liquidity have been placed short on overnight. And the system is still very liquid as we speak. We're over 600 billion. We have over 600 billion in the system. And it seems as if it's going to go this way, except when FX is being sold and Naira is being exchanged for that. All through till the period where the CRR debit, the 3% increase, will be debited and taken out of the system, which will be on the April 9th.
Now, let's talk bonds, because there is some concern in the bond market that rates have not yet peaked. What would you say about that?
Yeah, the levels at which we have the bonds right now are actually very attractive. But going on into the first week of the year, you want to see profit taking between today and Monday, which is end of the month and end of a quarter. And usually people will wind down due to maybe statutes or basic policy and taking profit, just trading decisions, basically. And outside that, you want to be cash. Want to be very liquid before the 9th of April, like we said. Of course, there will be opportunities to place and gain very high interest on the short term. And then after the 9th, when the debit is done, for surplus units, those who have funds left, they will take advantage of the high yields on bond securities. Average yield on bond securities right now is between 13.8 and 13.9. I see it getting back to 14.05 and then dropping back after the impact of CRR.
Still on bonds, we hear there's going to be the introduction of 5 new Colombian Treasury bonds in the JP Morgan index, which would increase its weighing, but of course that will come at the expense of other sovereigns listed on that index. Should we then have a negative outlook?
Yeah, what would happen is that it becomes an option for foreign portfolio investors who are coming into frontier countries. Frontier countries, I mean countries like Turkey, Nigeria, South Africa. And whenever there are issues in the African sub-region, maybe political issues, what you find is switching of bonds. And when they sell down, they simply take position on others. It provides an option for FPIs, basically. So you could see increase in yields on Nigerian bonds or corporate bonds that we have here that are benchmarked to Nigeria's ratings, and then see more activity on these Colombian bonds or any of the other 5 that will be issued. It provides option basically for the FPIs and competition for Nigerian securities that may be issued.
Let's get an update on the T-bills market, because we've seen price gains across all maturities in the past 2 days. Did that continue in today's session?
Come again?
Let's talk about the T-bill space. We've seen price gains recorded across all maturities. Did that continue in today's session?
Yeah, it's been up and down, basically, just as people are taking profit and selling down for liquidity. The levels at which we are now, 13.1, are actually very high, especially on 120-day bills. So we're seeing a lot of activity, buying and selling, basic arbitrage. It's not one directional. It's revolving around 13 to 13.1, and the market yield currently is taking a toll from what has happened in the primary and the OMO auction. We've seen a convergence of yield. Yeah, primary yields used to be very low, but we've seen that over time the yields have come to converge with what OMO is doing.
Of course,
even the secondary market has taken a toll from that.
There was some expectation that we'll have another OMO today. Did that come through?
Yes, there was an OMO today. About 60 billion was issued and sold. Stopped at 13.1, and the last more than 5 OMOs have now stopped at 13.1. That looks like a benchmark rate. Basically, at some point, when the CRR dust is settled, we will see yields come down on all securities, bonds and T-bills. People are trying to have a lot of liquidity.
Okay,
short term.